AEHL is in a strong bearish trend. Its 200-day moving average its underlying trend underscored by its 200-day moving average is sloping bearishly lower. And as things stood yesterday, the 4th of February, the projection that was that we will have an update today. Today might be it might gain something today, but so far it is down. This is the pre-market session. So far it is down. Okay. Um, Momentum is expected to pick up as well, especially from the 18th of February, and even reach highs it hasn't reached before. What is coming up? What could possibly warrant that? But in any case, we have been able to gather the data we have on the stock, including its borrow rates, 50-day average, short interest, and we have it here on Claude. Okay, so the price pressure momentum tells us what the moving averages appreciate, how they appreciate or depreciate, over the time frame of the chart you're looking at. So for this daily chart, the 10-day moving average, this one it's losing $4 every day, and its 10-day moving average is losing $4 every day. The 21 days 33.59, um 40 day 3.61, 200 day, that's underlying trend, 36 cents. Everything is severely bearish. The stock is in full capitulation mode with accelerating downward momentum. Negative derivatives confirm deterioration. Okay, distances from the moving averages. You can see that here. Okay, massive discount to all moving averages indicates severe oversold condition or fundamental collapse. Critical structural issues. Low float. Float is 730,000 shares. Short interest. 103% borrow rate, 15.88% short of float. Yesterday, the fourth, the volume was 102,000. 50-day average is, no, sorry, this is the, yeah, 50-day average is 5.3 million. So it is, okay, it says it's crisis. Maybe it is just bottoming. What has been going on? The stock, you can see here, the stock, I think let's have a look and see. Remember, I said the vote 50-day average is 5 million. So since let's get this date. Since, okay, we had, yeah, as a matter of fact, the volume has just been crushed, has been dropping. It's been dropping, has been dropping. And of late, it has even gone lower. We have what, 138, 214. Okay, 600. Okay, it was up on the 30th, Friday the 30th. But after that, yeah, lower price. I mean, volume is just it has just it's not anything like what it was before. Okay, let's see now. Let's see. There must be a reason why we have that 5 million 50-day average. I think it may be because of this expansion that happened as of the 30th of December. Yeah, when it's the volume increased by 47 million. There was a huge expansion that day. Yeah, so that affected that affected the 50-day average. So yeah, it's just an average. It's just a statistical indication. The stock actually prints well. The volume is usually more than 102,000, but it's all usually in the hundreds of thousands. Because of what happened on the 30th of December, it changed the whole average amongst other things. So it's not. It's the climatic event that happened then changed the whole dynamics. Changed the whole average. Okay, so but in any case, it does not. It's not an excuse. Okay, so this is the market grid. It gives us a range of possible prices. This is the extreme resistance. If it's there, if it's approaching this sort of level, then we are profit taking should be going on. Traders will be taking their profits at such levels. So this is where it is right now, in between the resistance and the support. You can see here it's trading no man's land, and these are the probabilities of retesting various prices. You can always pause and have a look and see. Okay, downside probability is heavily favored, 132% cumulative versus 63% upside. Should we be doing cumulative probabilities? No, we shouldn't be doing that. They don't add up. There's no grounds for them to be cumulated. Okay, trade setups. Don't apply this. If you apply it, you might lose money. Okay. So first of it has entry strategies staged. Okay, if it pulls back towards 0 0.9 to 0.72, then second one will be 0.65 to 0.68. Okay, this is actually a buy the deep opportunity, but it doesn't mean that you will succeed. Okay, and then only if the price pressure momentum crosses above $1 or one, yeah. If the loss on the 10-day moving average, if they've lost on the 10-day moving average drops to $1 per day, currently it's at $4 a day. That's what it's dropping at a rate of $4 a day. So your target will be 0.97. It's 10-day moving average, and then second will be 120. It's 21-day moving average, and then the third optimistic will be its 40-day moving average. Okay, and these are the probabilities. It requires business turnaround. Okay, stop loss will be zero point 0.6, hard stop, business failure scenario. Okay, catalyst required, energy business launch announcement with contracts, the stabilization of the price pressure momentums, something we want to see them go into trend mode, or at least, yeah, go into trend mode. Yeah. Trend mode is when the moving averages are appreciating by 25 cents every day, or if it's in a 4 hour chart, every 4 hours. If it's in a 1 hour chart, every 1 hour. So in this case, it's a daily chart. Short squeeze potential, 103% borrow rate unsustainable. Volume return. Okay. That well, we'll be looking at another big event, because usually the stock is you can see the float there. The float is around 630,000, so it's not out of place if it trades at those sort of prices. I mean, if it trades those sort of volumes. So rationale, 106 to 235% discount to moving averages, extreme oversold. The 40 period moving average forecast at 1.63 implies a long-term fair value. Short squeeze setup with low floats, high borrow costs, business pivot could re-rate the stock if successful. Okay, critical risk, liquidity crisis. Okay, doesn't mean much. Doesn't It didn't understand what happened then. So we're not really going to read a lot of meaning to that liquidity issue. Yeah. Potential delisting uh, below $1 for extended period. Business model incomplete transition. 14.5% revenue decline with negative earnings. Could trade to zero point 0.4 to zero point 0.5 in worst case. You can see here there's a projection that is pointing to zero point 0.4 as well. So this is a highly speculative distressed stock. Position sizing should be minimal. Okay, less than 2% of your portfolio, and only with risk capital you can afford to lose entirely. Okay, so be careful with AEHL, and that's an update. Thank you very much for watching this video.